Let's bring in our next guest. That's going to be Scott Bauer, CEO of Prosper Trading Academy. Welcome back to the show, Scotty.
Good morning, Tom. Great to be here.
All right. So we had some nice gains last week. Equity markets rallying on Friday on the back of Fed Chair Powell's commentary and his pivot, his dovish pivot here. What's your take here on the equity markets, Scotty?
I mean, they're looking really good right now, but I'd be a bit cautious. I mean, I can't believe, quite frankly, that Powell was as dovish as he was. I mean, it was, as you just said, quite the pivot. The markets are looking good, but I think they're vulnerable for any sort of data point that may come out that maybe changes the narrative. One of those would be obviously the jobs number that we're going to get next week. So we'll have to watch for that. We just got durable goods. Look like, from what I can see right now, kind of a little bit of a hot number. I like the markets, Tom, but I think it's one of those points that we talk about all the time, that if you want to remain in the markets, if you want to hold on to long positions, great. But buy that volatility or buy that premium, buy that downside protection while it's much cheaper than it has been. Because in my opinion, vol's not going lower from here over the next couple months.
Yeah, even with that rally last week, the spot VIX is still sitting around that 16 level.
Yep.
So maybe reflective of some landmines out there in the overall market. You mentioned durable goods came in 9.9% versus minus 6.7%. That was previous, but remember, there was a big cancellation of a lot of the transportation numbers. Core durable goods orders minus 0.2% versus 0.4% previous, and that's a little bit below the estimate of flat. On that one. So, Scott, when you take a look at that, you know, this is a volatile number just due to that transportation component within durable goods as that sways back and forth, and Boeing's got more problems, as we all know. But this really shouldn't affect the trajectory of anything for equities at this point, should it?
No, this one doesn't. I mean, you know, we all watch this one pretty closely. This is typically not a move the needle type of report, but, you know, the Fed is going to be watching every single report. Obviously, later in the week, we get a big one in PCE. But again, going back to what we talked about with Powell and his pivot, very, very surprising to me how dovish he was. He really strayed away from the data dependency sort of rhetoric to we're there, as he said. You know, it is time. And not only is it time, but we can see, you know, looking into his crystal ball, we can see multiple cuts, which he typically doesn't do. Yeah,
Scott, you know, it seemed like to me, just from his commentary and some of the written, comments that they had, it seems like he's really getting more concerned maybe than the market is with the jobs data. 4.3% unemployment rate. Yeah, we had a lot more people come back into the labor market, the immigration issues that we're having. That's probably contributing a little bit. But it's almost like he's kind of signaling to the market that they're seeing some underlying weakness there in the jobs data, and that caused the pivot.
Well, he should be a little concerned, or a lot concerned. They all should be. I mean, if we really break it down and we look at some of the layoffs that we've seen over the last couple months, especially in big tech, I think that is a precursor of what's to come. I'm not, trying to cry Pollyanna here or say that things are gloom and doom. They're not, but that should be a very big concern of theirs.
Yeah, definitely moving forward. Now, look at the move in crude oil here today. We've got some Middle East tensions causing a lot of this, but it seems like we keep bottoming out around that $70, $71 a barrel level. But as Kevin Green mentioned earlier in the show, it seems like we're getting lower highs here for crude oil, but seeing a nice pop here today, Scott.
Agreed with that. I mean, we have been range bound, and a lot of that range is fluctuating based on some of the geopolitical risk coming out of the Middle East. So that 71, 72 area up to 79, 80, and we're sitting squarely in the middle of it right there. But you're right, we are seeing lower highs, and I think if you were to remove that geopolitical risk, which we all wish that we could for a variety of reasons, I think we could actually be sub 70 on oil, because the supply demand issue is still, in my opinion, way out of balance, oversupply and less demand.
Yeah, we always talk about and think about the U.S. and how well the economy is doing. People are traveling, still doing experiences, but globally, we're starting to see a big pullback as far as demand goes.
Yes.
So that might be that concern. Scotty, finally, let's take a look at gold because we're just below all-time highs in there. Now, does this kind of set up that reflective nature that maybe there's some headwinds for equities here? When I see people pushing into gold, treasuries a little bit where we've got yields falling, that's also a concern. But is this central banks buying it, or is it just retail clients out there buying gold for a little bit of protection as the S&P 500 is just below all-time highs?
Well, central banks certainly were a big push over the last 6 months, last year or so, just buying up record amounts. Now I think you have a good mix of geopolitical risk hedging, if you will, the election coming up. And it does worry me a little bit. We know when we get to the point, we saw it with Bitcoin, we've seen it with other asset classes, when your neighbor starts talking about something, when the person at the checkout line at the grocery store starts talking about something, that typically signals a top or something to worry about. And I'm starting to see that with gold for right now.
Yeah, I think it's definitely a safety play, and everybody says, hey, have a little bit of gold in your account. And it's done so well over the last year and a half or so. All right, great stuff.
Exactly.
Appreciate it, Scott. Have a great day.
You too, Tom.
All right, that's Scott Bauer, CEO of Prosper Trading Academy, joining us, breaking down equities and commodities.